Thank you so much, Shruti.
All right, moving on. Tiger Global-backed investment startup Jar is eyeing the peer-to-peer or P2P lending space. Its co-founder and CEO Nishchay AG tells CNBC-TV18 in a conversation with Ritu Singh that the co-founder of Jar, is promising it's a P2P is a promising category, and if the company doesn't get into it, it would only do so after ensuring compliance was in place and all regulations were met. This even as the Reserve Bank is looking to tighten regulations in this segment following concerns about certain players flouting norms. Listen in.
Nischal, thanks very much for speaking to CNBC. When you think of Jar, you think of your piggy bank, you think of savings, and that's primarily your focus area, Jar. But we hear you're exploring a lot of other business options. Just fill us in on what's on the radar.
When we started Jar, the idea came during the peak of COVID. We saw how fragile personal finances of a common man is. A regular common middle class Indian doesn't have a safety net of savings. They don't have any sort of emergency fund. They don't have access to easy credit, meaningful credit, because of which they will end up taking loans from loan sharks. And last thing is they're not insured yet. They don't have any sort of safety net from an insurance standpoint. So our whole vision of the company is to build a financial fitness platform, which will help people to build and inculcate the habit of savings and slowly diversify that into multiple asset classes, starting from gold. From gold, we are helping them to diversify into multiple asset classes. We will help them to invest in mutual funds. We will help them to invest in multiple other alternate asset classes. And apart from that, we have also providing credit as an option. We are partnered with multiple NBFCs like Credit Saison, ABFL and all, and we enable credit to our consumers. It's going to be a captive experience. People who are saving with us is who will get access to these services. Same with insurance. We are partnered with ICICI Lombard and provide health insurance products at this point of time.
Nischal, it's been in the news, so I have to ask you whether Jar is looking to get into P2P lending. There have been reports that you're in talks with Lend Club. If you could elaborate.
As I said, from an investment options, we will give options to our consumers. We'll test the waters from every product out there, and P2P looks one of the promising categories for sure. But we will partner and we'll make sure that the compliance and regulations are met. Give enough declarations to the consumers that what they are getting into. Make sure that their KYC is 100% correct. Make sure that they are aware that they are going to invest in a credit pool, which will be lent out. At the same time, take consent from the users and declaration from the user that whom should this credit deposit should be credit. Like what is the credit score should be of a guy who is taking the credit.
Who are the larger NBFCs or banks that you've tied up with for lending? And through your platform, what kind of disbursements have you been seeing?
Sure. See, we have not tied up with Lend for lending. We are not.
No, of course not with Lend, with banks and NBFCs.
We are currently working with NBFCs. We are working with Credit Saison, ABFL. And apart from that, we are in talks with a couple of banks. Once things are in place, we'll start working on them.
If you could then give us some sort of a target for the next year or a couple of years, how you're planning to scale this?
We will not onboard a user for credit as a use case. It's always going to be a captive experience, a cross-sell to the users. The whole idea of credit is to make sure that my users doesn't build a habit of dipping into their savings whenever they are in need of cash. Okay. Their wealth will not compound if they keep on dipping into their savings. Okay. They should have access to meaningful credit so that they can have a general upliftment in their quality of life. Okay. Depending on my credit needs of my end consumers is how my credit story will come up with. We don't have any, it's too early to speak about those numbers yet.
Let's talk about your capital needs. The last time you raised funds was in 2022, was your Series B round. Yes. Are you looking at raising more funds? Are you in talks with any investors?
Right now, we are not in talks with any investors. We are well capitalized. As I said, we started the company during COVID. Yeah. The premise under which we started is that common man doesn't have a safety pool, and when we are empowering someone to do that, we should be careful enough. And we have been very frugal and we have been very watchful of how we perform, and all the numbers are under control. And we will raise capital when the market is good, when the time is right for us.
Well, you say you've been frugal, but the company has been reporting losses. In fact, there was a 77% increase in your losses in FY23, if I recall correctly. Just give us a sense of, how you see this turning around. When do you expect to be a profitable company?
The reason of losses is it's a very simple thing. Our unit economics is very strong. We don't lose money on transactions. We invested heavily on brand building. We have built enough strong brand recall now, because of which we don't have to do that. We will do sustenance campaigns as and when we progress.
What about becoming a profitable company? How soon do you think you can achieve that?
Right now we are not making any numbers public, but we are in a very healthy position. Becoming profitable is a choice, to be very honest, for a lot of companies, to be very honest. Meaning, if you simply concentrate on certain revenue lines and do not invest your time and effort and money on nurturing new revenue lines, many companies can become profitable. Probably we are one of them. Most of our expenses are going towards capability building. Yeah. So we will continue to see investments in building capabilities.
All right, on that note, it's time for us to head into a short break. But coming up, specialty coffee QSR chain Up Coffee adds $3.4 million to its kitty. My colleague Arundhati checked in with the company's founder and CEO on what's really